Hi, welcome to Boring Money, Rich Life. I'm your host, Joy Hicks, and I have been MIA. So, as you can see, I am in a new space. I actually recently moved to Dallas, Texas. So, I have taken a couple weeks off just to kind of get packed, get moved in, get unpacked, and get settled. So, I definitely apologize that it's kind of taken me a while to re-record a new video, but your girl is back. And today we're going to talk about, are we going into a recession? So, since I've been gone, I feel like there is so much going on right now in regards to like money and the government and all of these different things. So, I felt like for my first video back, it was only right to talk about, are we going into a recession? Because obviously there's a lot of uncertainty right now. So we're just going to talk about that. I felt like it would be a good thing to kind of get us started back. So, as you guys know, talks about tariffs is really a hot topic right now as we're kind of watching to see what Donald Trump is going to do. We know that kind of the main countries that he wants to put tariffs on is Canada, Mexico, and China. And those are like our largest trade partners. A big majority of trade is coming from those three countries. So, of course, that has been talked about, since Trump has even been campaigning. And then, definitely, since he got into office, he's talked about all of the tariffs that he wants to impose on them. There's been talks of retaliatory tariffs and all of these different things. And I feel like there's so many different changes. People are confused. We don't really know like what's in place because it just keeps changing. So I did read an article that was saying by April 2nd, we should actually see like what the tariffs are going to be finally, just because I know there's been like talks of 20% tariffs, 25% tariffs, additional tariffs on China, and all these different things. So I was reading an article last night that was saying by April 2nd, which is coming up, if there's not like additional changes to the negotiations, then we should know by April 2nd what those tariffs are going to be. Tariffs have definitely created a lot of uncertainty from consumers to, affecting the stock market, businesses, all of these different things. I think everybody is kind of waiting to see what the tariffs are going to be. And that's just because tariff, like, it affects everybody because we import so much in the US. Like, not a lot is actually manufactured in the US. Not a lot of food is grown in the US anymore. And so we import so much food from Mexico. We import oil from Canada. We import goods from China. So it's like putting all of these tariffs on these countries and then these countries putting retaliatory tariffs on us. There's a lot of uncertainty because, especially as consumers, we know that most businesses are probably not going to cover the costs for these extra fees and things that they have to pay in order to get us goods. They're most likely going to pass those costs on to us as consumers. So, what does that mean? That means things will end up being a lot more expensive. We're already in the middle of a huge inflation crisis. Things are already expensive. So, having these tariffs and additional tariffs and all these different things, there's a lot of like projected forecasts that things are going to get even more expensive. So there's definitely a lot of uncertainty, a lot of dis-ease because of the talks of tariffs. And apart from the tariffs, there's also a lot of job loss happening. So I've shared with you guys many times that I'm in technology, and I shared with you guys that pretty much Q1 of 2023, tech had so many layoffs, and I feel like we're still seeing so many layoffs in technology. Like 2023 was kind of the beginning where you had like the Disneys, the Amazons, the Apples, all these big companies laying off like 10,000 workers at a time. And that has kind of still been happening, maybe not at such a big scale, but there's definitely people who are still being laid off. And then now because of Donald Trump's new like government strategies and plans. We have all of these government workers who are facing job loss or might be put on probation or have to come back into office. And so there's a lot of different things, not just from the consumption side, but also from the like job security side. So again, that's also creating a lot of uncertainty in our economy, which could definitely trigger, you know, questions around whether or not we will be in a recession. And last week, the Federal Reserve Bank, they kind of decided that they're not going to do a rate cut right now. So I was reading a few articles that was saying that they were kind of deciding whether they were going to do maybe like two rate cuts this year. Um, I feel like last year they had kind of talked about maybe two to three, but I think like this year it was kind of looking at if they were going to do two rate cuts. So the Federal Reserve Bank, they decided that they're not going to cut rates right now because they are predicting that there's going to be a slowing in the economy and there's also going to be higher inflation. So because of those two things that are kind of like happening at the same time, they decided that they're not going to cut rates right now. And I was reading, I've been doing like a lot of research right now because there's just so much going on. So there was also an article from the Bank of America CEO, and he was saying he feels like they're doing the right thing. He doesn't feel like we're actually at the point of a recession just yet because he was saying from the data that he's been seeing, although consumers are worried, consumers are still spending. And I will say, I do find that very interesting. I feel like we all know that there's a lot happening in the economy. We all know that the economy is not in a great place and it hasn't really been in a while. And now it's kind of looking even worse with all of the talks of tariffs. But I do kind of feel like people are still spending a lot. I feel like it wasn't until kind of like the DEI rollbacks that people started boycotting. Like we saw that boycott with Target, and Target lost all of that money. But Target didn't lose the money because people are worried about the economy. They lost the money because of their policies and not supporting diversity and inclusion. So I do feel like it's kind of interesting that with everything going on, people losing their jobs, inflation, all of this risk that's happening right now in the economy, that people actually are still spending. I went to Florida this past weekend for my daughter's birthday. And I will say I did kind of pull back because I told you guys that I spent like $8,000 last year in travel alone. So I did take a trip, but I definitely like pulled back. Like I could have stayed right on the beach, $200 a night, things like that. But I was like, no, let me go with like the nice hotel that's a little off the beach. I'll rent the car. But I feel like a lot of people are still spending. And that's kind of the reason why I feel like they're saying that we're not in a recession because people keep buying things. So usually when you're in a recession, there's definitely like a slowing in the economy. But because consumers are still putting so much money into the economy, that's really why we're not technically in a recession. Another article that I wanted to kind of talk about too, it's a CNBC article that came out today. And it was kind of like a survey of different CFOs and just like their opinions on the economy, their opinion on what sectors they feel are going to have the most growth in the next 6 months. So it was saying that 40% of the responses honestly just don't know because, again, there's just so much uncertainty. We don't really know how the tariffs are going to pan out. We really don't even know what the final tariffs are, to be honest. And then energy came in at second place. 20% of the responses felt like that will probably be a sector that does see some growth within the next 6 months. And then tech and healthcare came in at third place, where 10% of the responses said where they feel like those sectors will have some growth in the next 6 months. Tech, I feel like always has potential to grow because there's always new things in technology, and we know AI is really big right now. We also did see all of the tech CEOs at Trump's inauguration. So I definitely feel like there is going to be more opportunity in tech for growth. And if you're looking to do like startups and things like that, maybe there's going to be new policies or new accelerators or all these different things to kind of help you with that. Or it might just be a push for the big tech companies that already exist. I don't know. But I do kind of see tech and definitely healthcare, of course. Like healthcare is one of those sectors where there's always going to be money flowing to it, especially when we're talking about like pharmaceuticals and all those different things. So I feel like that makes sense. And then it was kind of interesting because the survey was saying that 0% of the CFOs believe that communication services, consumer discrepancy, real estate, or utilities would be best performing sectors over the next 6 months, which is kind of interesting for real estate because I feel like there's a lot of development that's supposed to be happening. Like Trump has talked about even providing some federally reserved land to help with like the housing crisis and things like that. But there is talks about the fact that construction is going to also get very, very expensive. We all know the price to build a house is already sky high and through the roof, but a lot of the lumber that is needed to build homes comes from Canada. So I think that's kind of why there's a lot of uncertainty there, because if we have all of this extra cost to import what we need, and then like the material for drywall that comes from Mexico. So it's kind of like a lot of uncertainty. So I can definitely see why they're not really projecting a lot of growth over the next 6 months. Now, that doesn't mean that that can't change, but this was just a survey for the next 6 months. And then about 90% of the respondents do feel like the Dow is going to drop below 40,000. And so again, a lot of CFOs, a lot of businesses are projecting that the next 6 months will probably be a little bit challenging, a little bit costly. So, what does that mean for you? I think all of us have kind of been anticipating a recession for a while. So when 2020 happened and COVID hit, I think we saw like a little bit of a dip in the economy. But of course, that was kind of combated by all of the money that was popped into the economy. So all of like the PPP loans and all of the stimulus checks and all those things that got people spending, it kind of helped us avoid like a 2008 type of recession. But I think a lot of people are anticipating that a recession is going to happen. And in this survey, they were saying they do expect the recession to be mild to moderate. So maybe not like devastating like the housing crash in 2008, but definitely felt. I think a lot of us can already feel that there is a change in the economy again because a lot of people are losing jobs, things are getting a lot more expensive. And so there's already kind of like a tension in the economy. So I would definitely say, now is probably a good time to get rid of like high interest credit card debt. Now is probably not the best time to buy a vehicle because there's talks that even the automotive industry is going to get hit really hard by tariffs. Now is probably not the time to do a lot of financing. Instead, maybe like investing or and I will say, like, again, I always tell you guys, I'm not a financial advisor, but I will say, like, having an investor mindset, these are the times that investors like to look for opportunities. Because although the economy is not doing great, if you've kind of been saving up your money and you have a good nest egg, now could be a great time for opportunity because as the market is crashing, you can get a lot of good deals for the low prices. So, if you have an appetite for that, now might be a great time to start investing. But again, we're not officially in a recession, but there is a lot of projections that we will be going into one either in the second half of 2025 or in 2026. So, just a great time to financially prepare. And as always, what is one thing that you can do today to start fueling your rich life? I'm your host, Joy Hicks. Thank you for watching and be sure to subscribe.